But anyway, let's go look at these moves over here. So we were looking going into 10 o'clock. All right, so we had, you can see this right here. The first move in our 10 o'clock time of day right here. We're coming down. See, zone one, we're coming down. Then we got a reversal here going up. So we're moving up into the 10 o'clock time of day. So what we would logically be looking for with our narrative is if we're moving up into 10 o'clock, we'd be looking for a move in the opposite direction, right? That's what our narrative says. So, but that doesn't mean that as soon as you get something, you're going to want to jump into it to the downside. I mean, you can do that, but then you got to be willing to keep, you got to be nimble and you got to be willing to get out of it if it doesn't go your way. So like right here, we had a little pullback and then this looked good to continue to the upside, but we got this reversal candle right here at 10:04. Right here. This was our reversal candle right here. Okay. So, and we're in a move up. So we're looking for a move to the downside. That's what we expect our 10 o'clock move to be based on this. And we got a reversal candle here. And then the next thing we get a moving average cross and we get a confirmation candle. Now, remember, I'm looking at 2-minute chart here, not the 3-minute. But we also I've got a level here. This is the 15-minute opening range level on SPX. And that is not included in your studies or in your workspace, but it's a trade station indicator that you can add if you want to. A lot of people watch the 15-minute opening range because like today, see that we had like what a 25-point sandwich, and that was what 2.5 points on or so on SPY. That's a big sandwich. And then we saw that we really stayed in the upper half of it for most of the day. So if you're looking for using levels of pre-market sandwich, sometimes you need something else, especially, when it's that wide. And, the opening range can give you it can give you a range within a range, and that can give you something to look for there. So a lot of people do that. They'll look at the 15-minute opening range, and when it breaks out to the upside, and then it come back, retest, and then continue to move up, they'll play that. And that's kind of what this was right here. It was a play to the upside off of that one. And some people probably took that maybe as a scout or whatever. But also then it gives you, once it breaks out, then if it comes back down, it gives you a potential level of support. Now, unfortunately, we got two things going on here. It came down and it kind of peaked below it right here. You can see that right there, where it broke through, but we didn't break our moving averages. We didn't close below them. So we still didn't break upward structure. We just pulled back, and you can see we got a little, we had some downward action on the cycle oscillator. We were kind of inching down, stair-stepping down, but it didn't fail, and we still had momentum going up. We still had all blue dots right here. I don't have the volume on here, or I think the Wyckoff, I think that's what this one is because I got the wrong thing. I need to have just SPX.X, not W. So I got the wrong one up here, but that's okay. As a matter of fact, let me just change that real quick. So let's change that. So we'll do $SPX.X. I never can remember which one is good. We were talking about this level here. It came back. We moved up. Red bar. Pulled back. Okay. I'm going to go ahead and erase them. And we can just start again. All right. So we had this move up coming in at 10 o'clock. So we were looking for a move to the downside. That was our narrative. We did have cycle oscillator pulling it down. That was looking good. RSI was kind of coming down, but it was still up here above the 50. See that? So the buyers are still in control here. And we're just fading a little bit, but it's above the 50. And the other thing is we got blue dots all down here. There's a scattering of yellow dots in there, but for the most part, it is all blue dots. And we did have some of these points right here. You can see when we got these pullbacks, we got some yellow dots. See right here was a Wyckoff wave dot. That was the pullback right here. Then it went right back to blue. Then right here we had Wyckoff wave. This was another pullback right here. See that? And then the RSI, it kind of gave you some of these little heads up here when you get the yellow dots, so that you can see that RSI was moving up. I know this is one of the things that Michael does a lot of times. He will pull his RSI down and stretch it out. So you can see you got RSI coming down, price coming down, RSI going up, price going up, RSI coming down, price coming down, RSI going up, price going up, pullback, RSI down, move to the up. So it's coming down as far as the RSI is, but price is still going up. So it looks, just looking at this, it looks like price will be following on the way down, but it really isn't, because we got so much buying power going on right here. And this is above the 50. It's actually above the 70, which is the upper extreme. So there's a lot of buying going on right here. And you have to remember, we gapped up over 100 points this morning. So there's a lot of buying going on. So kind of keep that in perspective, with what all is going on. And not just say that, cycle oscillator is going down and the RSI is going down, so price is going to go down, because sometimes it doesn't. This is one of those occasions when it doesn't. It's because everything is so far skewed to the buyer side. Let's see. Let's see, Astro Dave, are the green and the red clouds, you talking about this band right here? No, that is not Bollinger Bands. That is the current energy band. That's one of the studies that Kevin put together for us. It is this one right here. Current energy band right here. And that colors this based on the strength of the move. It's a little bit like current energy if you have that on the candles, which I don't use that. I don't really like that. But I do like this current energy band, because what it does is, you can see whenever price is really moving strong to the upside, you can see the price candles are following the green. And the current energy band is green. So that tells us that we're in an up move. Now, whenever we get a pullback, we can go to, see, it's pulled back, but it's still green right here. So it pulls back inside the energy band here. And you can see that the slope of the energy band starts to kind of flatten out a little bit right here. And then right here, we get moving average crosses. And this is also around 1030. We get a little pullback here. And we go from a green energy band to a red energy band. So that tells us that this is more of a sell move right here. But then it kind of flattens out, and then we hold this level. We don't fall apart. We don't come back down and test this level where we got the opening range. And you can see we also got this level, came up to it, pulled back, came up to it, broke it, chopped around a little bit, then we rallied off of it, pulled back. We didn't come back down here. We did pull back, but we really kind of pulled back to the 20, which is the cyan line right here. And we came back to this level right here. So this is another key level, the 20. So that's why you want to watch the 20. Let's see, where's price relative to the 20? Right here, it came down. It didn't touch the 20, but it got close to it. What did it do? It didn't touch the 20. It came back. We had a moving average cross. We had one to the downside right here. Then we had one to the upside right here. And then what happened when it got close to the 20? Got that moving average cross, and it rallied back to the upside. And then we pulled, we got close to the upper Bollinger Band. We had a reversal up here, came back, didn't cross the 20 right here. It came to it. You had that moving average cross to the downside right there. Came down to the 20, bounced, another moving average cross to the upside, because it looked like it was going to continue up, but it did not. It kind of hit this level right in here, and it rejected it, came back down, and then it held this level. You see where you see these floors. So this is really kind of a floor, or a ceiling here on the top side where we're coming up, bouncing off of it, bouncing back down, coming down, hitting the floor, bouncing back up. We're just kind of chopping in here. Chop up, 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 down, up, down, up, down, up, down, up, down. And then we finally break out of it right here. Okay. But that's the current energy band. That's not Bollinger Bands. And you don't really need that either. But I had it on my charts for a while, then I took it off because it is kind of busy. It can make your candles and all kind of hard to see. You can adjust the intensity of the bars behind it, make them lighter to make it easier to see. But I usually just put it on like one chart and then not on every chart because it does can be distracting. But it is a helpful tool in my opinion here. So we were talking about this move right here coming into 10 o'clock. We came in and we pulled back. And then we had this consolidation period right here. So we did not follow through. So if you took this to the downside, you really didn't have a setup. If you did that, I mean, this looked good right here. You crossed over. RSI looked good, but you were not here at the 50. You didn't have that. You didn't have dots. Stochastic did roll over, but I mean, there was not a down setup here on 2 minutes. So you really would not have wanted to take that, especially with, if you kind of look left, you could see that you had a level here, in this range right here. So you would want to see some follow through. And then also when you get down to this, seeing this is when you want to come back over and look left again and look and see what's happening on your anchor chart. So this time period here is, let's see, right here, we're at 10:06. So this is our 10 o'clock time of day. We're in the right time of day. Here's 9:55. We're going up, up, up. This looks kind of good right here, but then look, this is 10:05. So this is all right here in the 10:05 candle. We get this candle here that looks good, but you wouldn't have jumped in on this based on the anchor chart right here, because see your RSI is still pointed up. It's still above 50. Cycle oscillator is it was green right here. It was kind of coming down, but it really hasn't failed yet. And see, you had all this downward action going on here, and you had upward price action. So you don't have confluence between price action and your cycle oscillator right now, or your RSI or anything. And see, this was kind of a fake out thing right here. Look at this, pull it back. RSI is coming down. This looks good. What did it do right here? It hit the RSI, got really close to it. I don't think it even hit RSI, 51.59. So it never broke the 50 to the downside. Even though it looked like it was falling apart right here at the open, it bounced and came up. And then we got these blue dots going on here. So it went from yellow down to blue dots right here. So we had a reversal candle here, and then we had this doji candle. It's a spinning top, actually, I think, because it does have a body, but you got a big wick on the bottom, big wick on the top. So indecision right there. Is it going to come down? Is it going to go up? And then we got a green candle. And that was still 9:50. So we still hadn't hit 10 o'clock. Right here is 10 o'clock coming in here. We pulled back, but if you look at this, you got reversal candle. And then do you get a confirmation candle? It looks like you would have had one because remember, we were talking about this. You got this wick to the downside. So at one point, this was a red candle coming down. It looked like it was going to be a continuation candle right here. But then it wicked back up, came back up, and then closed green. So that was not a confirmation candle there. And then so this was a reversal candle off of this, a pullback. So you got a red candle coming down, then you got a reversal candle here, and now you get a confirmation candle here, and then you actually take out this red candle right here on this green bar here at about 10:20, which would have been this area, probably right around in here. When we took this wick out right here, that's 10:18. So right in here, you would have probably wanted to think about taking this to the upside, and that would have been your move to the upside. And then we have this move to the downside right here. We got red bar coming off of the coming off of the 1024 closing candle. Came back down, came back to the 20 here. So you got a reversal candle, confirmation candle. You got a moving average cross right here. Problem with this one is it didn't really go that far. Cycle oscillator pointed down, RSI pointed down, stochastic pointed down, looked good, but you don't really have a good dot set up. You still got positive ticks going on. And then if you would have look at this, you would look left and you would see that you got a previous swing high right here. So this is potentially going to give you a level of support going down. And what did it do? It came right down to this level right here where I got my cursor and crosshairs. Came down. It did look like it was going to break through it, but you got the 20 right below it. So you got a lot of support right here, and it bounced. Came back up, didn't take out the highs here, and then it failed again, came down to the 20. So, I mean, it still looks like it's going. So, I mean, you could have taken this, but you'd have had to take some heat. That would have been like you would have taken probably the 35, 30s right here, and then it got down to, that was probably it. If you stayed through all this with that wick right there, coming down to 25, the 35, 30, 25s, you could have probably converted that, but it would have been kind of painful, I think. And you did see, if you waited for the setup and everything, when you got your yellow dots right here, that would have been in this candle. So this would have really been where you would have had the setup to take it. And that's right there at the 20, and you can see it didn't go very far. So if you would have taken it there, that would not have worked out for you. And then it kind of moved back to the upside, still stuck in this range here. And then it finally broke out here, but then it came back up to the high, the red bar high right here, and just kind of held that level for a while. So, I mean, we really didn't. I mean, there are trades here if you just trade off the moving averages. But, I mean, to look for the setups, you did get the setup here to the upside. You had all blue dots right here. Cycle oscillator, you had the green cross, moved up. RSI was here at the 50, never touched it, came down, and it started moving back up. So that looked good. So it came down, and then, so here's the 50. This IN is the 50 right here. So it came down, and then it flattened out, and it started moving back to the upside, and that's what this move is here. So you could have looked at that moving average cross to the upside. It broke the 20 there, and kind of when it took this moving average cross out right here, you could have jumped in right there, kind of been aggressive, because most people would like to see it take that red out there, and that would have been a short scalp right there, but it would have worked. Don't know if it would have converted. That would have been if you'd gone in the money, you got the 40, 45s, and then that came up to close to 50. So yeah, maybe so. And then you came up here, put that level in there, back at the red bar here. It did break. It looked like it was going to break it, which it did, but it just couldn't continue on up. If we would have gone back and looked, there would have probably been another level up here at about 66.50. And I would have just kind of looked at this whole thing as a range right here. Especially if you look at the upper Bollinger Band, looking at that level right there. That's right there where it is if you carry that on over. It did flare up a little bit like here, like it was going to move, but then it failed. And then it came down, moving average cross here, a little pullback, and then down she goes. You see it came back down to this level, broke the 20. This is a key thing right here whenever it does this. Came down, moving average cross right here, came down, pulled back up, came back to the 20, and right here it broke through the 20, and then that was the move right down here. And that was probably the best move of the morning right there.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.